JobKeeper announcement has finally been finalised as of the 20th of April, and we thought we'd just run through a dozen questions around the eligibility and how to enrol and what reporting is required. So I've got with me Dale Kitching, and I just wanted to start off with the first question around eligibility. If I'm a self-employed, am I eligible for the JobKeeper payment?
So this has been JobKeeper has been an ever-changing. It's been an ever-changing thing where we've finally been given more specific guidance around how it's all going to work and who's eligible, how they apply, all that sort of stuff. And yes, self-employed people, specifically sole traders, are entitled. They need to go to their business portal and register for JobKeeper. Once they register for that, they'll then receive the $1,500 per fortnight as per anyone else.
Okay, great. The next question is, I have a trust. Can trusts receive the JobKeeper payment?
So it's not 100% clear about trusts. You can receive, so one beneficiary out of a trust can receive the $1,500. That's clear. But it's not clear on what the trading conditions need to be in order to be eligible. So is a non-trading family trust eligible for the $1,500? We haven't been given guidance on that. I would assume not at the moment. I would say the easy scenario is that if you were a trust that was running a business out of it and you worked in it but didn't record yourself as a wage, then you can pick one of the beneficiaries to receive the $1,500. Anything more complicated than that, so anything to do with if it's an investment trust with just investment activities, we'd have to wait for further guidance. So I would hope that that would come out within the next week or so. But yeah, remains unclear. But working trust, so let's say you run your business out of a trust and that business is say a bookkeeping firm and you don't take wages and you just pay yourself a distribution, then one beneficiary can receive the $1,500 a fortnight.
Okay. Well, I think the next question ties a bit into that also. If I'm a company director, that receives director fees, and am I eligible for the payment?
Yeah, same again. So if there's a company with multiple directors, so if they've got, say, 3 or 4 directors, only one person can receive the $1,500. But same scenario, partnerships are the same as well. So if you run a partnership and there's 2 partners, only one partner can receive the $1,500. It's just a case of going into the business portal, going through the registering the business. There's a different section where you can register the individual that you want to receive the payment that's not to do with a wage. So you go through there and then that person can receive the $1,500.
Okay. And I'm a self-employed and also have a second job. And am I eligible for the JobKeeper payment?
Whether you're self-employed, whether you, so you're self-employed. Let's say that you work for somebody and then you also work part-time at another one. You can receive other income. So people can receive other salary and wage income and also be eligible to get the $1,500 wage subsidy payment. So if the business in question is subject to the conditions in that they have had a 30% drop in trading activity and they meet the other requirements, then yes, you can register for the JobKeeper and continue receiving the other money.
Okay, great. Yeah, also with regards this is apprentices as well as JobKeeper. So can employers receive both the JobKeeper payment and the supporting apprentices and trainees wage subsidy?
No, one or the other. So you get paid the wage subsidy up until the end of March, I believe it is. So you get the 50% of the wage subsidy up to the end of March, and then you switch into JobKeeper. I haven't done the numbers on which one is better, but I'd assume it'd be JobKeeper. Yeah.
Yeah, most apprentices, 50% of apprentice wage would be lower than the $1,500 a fortnight. So next question would be around hiring. I've hired an employee on the 1st of March. Can they receive JobKeeper payment?
No.
Are they eligible?
No one past the 1st of March. So anyone who's been hired since the 1st of March that weren't employed previously to that, so you can rehire people, you can bring people back who were employed previously, but you can't do anyone new, and you can't do casuals who haven't been working for 12 months.
Okay. Now, with today's, April 20th has released all the enrolling, and the portals have been opened up to reporting and enrolling.
Yep.
So I just thought we'd run through where do you enrol in the JobKeeper payments?
So it's all done through the business portal. So it's setting up a MyGov account, linking your MyGov to your business portal. Most people would hopefully have a business portal by now. And then there's links on there that says, that refers you directly to the COVID-19 relief, which takes you to the forms that need to be completed for the JobKeeper program. It's a bunch of questions that ask when your income is dipped, are you more than likely to be eligible? You need to provide specific numbers of employees that you're claiming for, and that's about it. And then you're in, and then it's all about setting up your reporting of your wages on a regular basis, so the ATO know that the income is being forwarded to the individuals that you're registering for. In that, it's usually people are going to have to set up the single touch payroll system, and that single touch payroll system will then link to the ATO, telling them who is receiving the payments, and it shows that they are continuing to receive the payments. There are ways to do it without registering a single touch payroll system, but we haven't seen details on that yet.
Okay. So with regards to enrolling, do we need to provide, do employers need to provide business financials or any figures?
No, enrollment is purely done on a basis of you answer the question and they take it for what it is. There may be requirements around the June BAS, I believe. So the June quarter is the quarter that's going to be taken as the reference to see if the income has gone down. So there will be, I would say, ATO audit activity around that to see that the income has dropped by the 30% as opposed to what it was last year. But is there any specific code that's going to be looked at in order to get JobKeeper? No. It's just a case of you nominate, you go in, and then you get paid, and then I would assume, I don't know for sure, that they will then have cases that they do audit later for, say, people who income hasn't gone down by much, or some people whose income has gone up. They need to then explain why they perceived that they were eligible. Because that's another thing, is that once you are eligible, you seem to be in the system. So at this point in time, there doesn't seem to be a mechanism that kicks you out of the system. So let's say your sales dropped for all April, May by 50%. That's enough for you to be eligible for the system. So you enroll in the system. There doesn't seem to be a mechanism that kicks you back out if your July, August, September sales increase above previous year levels. But we will be guided. There may be further guidance on that, but at the moment, nothing kicks you out.
Okay. So once we've enrolled and we're eligible for the JobKeeper payments, do we need to keep reporting information to the ATO?
Yep.
What's
And
the requirement there?
so the requirement is that you need to set up the single touch payroll system. So the initial questions that they're going to ask is, who are the people that are getting paid? What's their tax file numbers? And I believe that's about it. So then there will be a link to the monthly payroll figures that you lodge. So by lodging through the single touch payroll system, that automatically puts it on people's group certificates for the end of the year. So it's like a way of locking things together. So what that means is they'll be looking to see that the people you registered for are the people that get paid fortnightly or weekly or whatever it's going to be. With the single touch payroll, that you lodge that every time you do your you do your payroll. But if you don't do it that way, at the end of the month, there will be a reporting requirement, which they haven't released the details of, where you're going to have to report a bunch of figures to the ATO. And I would assume that's who have you paid, when did you pay them, how much did you pay them.
Okay, great. Well, I think you've pretty much covered the last question, which was if your business improves, do you lose the JobKeeper payments? And
Yeah.
we'll just reiterate that you don't lose them if turnover improves.
No. So, so you keep JobKeeper. It seems to be the main focus is that the ATO want the money sent to the individuals. The focus at the moment is not on the eligibility. I think that's going to come later. So it's sort of they've got loose mechanisms on getting into the system. I think that's in order to expedite the money to the people that need it. But I do believe that they will be coming in later to sort of make up for the loose, the sort of the loose guidelines on getting into the system. Any other things of note? I don't think there's a whole lot that's changed.
Just to talk about from the business point of view, with all this extra reporting and everything required, you're not only maintaining your employees and giving them a job, but you want to just run through the benefit of the withholding tax credit on top of the payments, where you're receiving a bit of a deduction there.
So it seems to be that if you paid someone $1,500 a fortnight, there's a roughly $200 tax credit that the government is going to give you. So what that is you pay them a before tax amount of $1,500. You have to withhold $200 tax, and then you pay them $1,300 per fortnight. Now the $200 tax is part of the business. I don't know. I can't remember what it was. The business cash injection boost.
Yeah,
so what they're doing with that $200 is they're going to credit you for that $200 in your BAS account, plus also pay you an additional $200 in the months preceding June. So I think it's July, August, September, I think. So effectively for the $200 you get now, you get to keep $200 of it now for each employee, and you'll get $200 extra in the new financial year. Yeah. So once the physical payments of the cash boost come around, which is a small help for employers, and I think people with more than one employee can use that to sort of manage their cash flow a bit better. So let's say you've got 10 employees and you get the $1,500 in a fortnight, you're probably going to get close to $2,000 of that doesn't need to be spent on wages in that fortnight. So that's $4,000 a month that can be used to pay other bills because the credits are already been put through for the PAYG, and then you get another $4,000 on the other side of the new financial year.
Yeah, and that would benefit small business employers. You have to be aware that there is a $50,000 cap on the PAYG withholding credit. So
yes,
it will cap out, but for most small businesses with a couple of employees, it's a good benefit.
Yeah, I think anyone who's running about sort of 10 employees and under should be pretty easy to get the benefits, all of that. Casuals are out. I don't sort of see a lot of the other detail. Yeah, not out. So sorry, casuals are out if they haven't been there for more than 12 months. But there's not a lot else that really needs explanation. It's all a case now of everyone needs to get registered. So that is individuals who are sole traders. So sole traders need to register the same as companies, the same as trusts. If you're not receiving a wage and you're worried about how you get the money, you need to then register yourself as a specific individual. And then what that is you don't need to provide wage information for that one person, and they will continue to pay you the $1,500. But that person needs to be either a sole trader, a listed partner in a partnership, a beneficiary of a trust, director of a company, or I think that's about it. Yeah, that's about it.
Okay. Any last thoughts on what you wanted to add with regards to anything coming further from the government, or what do you expect to see with businesses over the next 3 to 6 months?
I think
are you seeing
the
giving you feedback?
I think the main problem we're having and what we're seeing at the moment is the people who are running a bunch of subcontractors seem to be having the least luck in all of this stuff. So for a smaller business who, let's say a dance school, and they've got a bunch of contractors as teachers, they don't receive any of these payments. They also don't receive any of the $10,000 government grants, because that's also based on employing people. And they also don't seem to be receiving the PAYG. So they seem to be the biggest losers out of all of this scenario. It's hard for them to continue to run businesses, and I don't see anything that's going to pop up on the horizons that's going to help them out. Other than that, I think things are travelling quite well at the moment. There doesn't seem to be a lot of stress. I do think if it does drag out over the next sort of 2 to 3 months, or even over the next month, people are going to start to feel it, because they're starting to sort of talk about that drain on their cash flow. A lot of commercial leases have been renegotiated. So a lot of people are taking advantage of that and getting reductions in the amount they have to pay in the commercial leases. So wages generally runs you about 30% of the business. Rent generally runs you about 30% of the business. Then you have other things like, purchase and all that other stuff. So a lot of the fixed ongoing costs seem to have been squared away. And I would hope that once the cash starts flowing, that everybody should be, except for the people I spoke about before, they should be okay to see out things until things start again. The issues are going to come in September when these payments stop, and then everyone's expected to go back to work. And if it doesn't just go back to what it used to be, that's when we're going to see a lot more pain. I believe that the construction industry is going to be one of the worst hit, because there's a direct effect of, don't quote me on this, but the number they were saying is that 50% of property growth comes from immigration. So that is if the property values goes up by 10% in a year, 5% of that comes from new people to the market from undersupply. So that seems to be removed. I think we're going to see a build-up of properties flooding the market once this is all over, which is also going to put downward pressure on property, which is also going to make a lot of developments not as viable as they used to be, and maybe the holding costs are going to get a bit much. But then, everyone got they got an extension to their payment terms. I think the only thing that I see as a problem is that all these changes aren't a removal of the expenses. So the rent is only being deferred and has to be put over the final few years of the businesses. So all we're doing is shifting a bunch of expenses from, say, a 3 to 6 month period now, and then putting it into the following financial years, which basically just makes businesses less profitable in the following financial years. So if we see a downturn in income of, say, 20% per company, plus an increase in expenses of, say, 5 to 10%, that 30% change in net income might be the catalyst that starts to really turn the economy. So I think that's when we're going to start to see things.
Yeah. So yeah, we really need to start getting back sooner rather than later.
Yes.
And there will be flow-on effects, but yeah,
but
each
coming,
day drags it out.
yeah, just coming back lean and just don't take on too much debt. I think the people that take on a lot of debt in this period are going to be really struggling to get out of that debt in the end. That's the other issue that we're looking at. So you're going to come on with increased rental expenses, a loan that needs to be paid down in 3 years' time, plus a reduction in your sales. Now, those three things put together for a business that's just struggling to get by that's the end of the game plan. So it's looking sooner rather than later about what debt you should be taking on, being careful to not sign personal guarantees for any debt that will sink everything. So if it's a loan and you've signed a personal guarantee and you're just taking on debt just to keep things going with sort of a slim chance of surviving, it's probably better to pull the pin early and then work out something else, because that debt is going to destroy all of your personal assets. That's probably one of the biggest fears that I probably have at the moment. So the banking side of it, which is the cash being borrowed from the bank to support the reduced cash flow, doesn't seem to be as nice as the government was letting out, where there would just be loans given out to people and they can just take them on. A lot of the overdrafts have very high interest. A lot of the personal loans have very high interest. And I think in the realms of 10 to 13%. So it's not what the government was originally talking about. They were saying, kumbaya, we'll have all these loans. And no, that's the other thing. Overdrafts are also done at a high percentage as well. So they're about 10%. So the only thing that seemed to be a decent level of cash flow was the small business loans, unsecured business loans. But that money can only be spent on certain things, and it's not as easy to get as it once thought was. So yeah, it's just, I think those are the things that may also put a bit of pressure on people in the end.
Yeah, so I'd probably suggest that if you are looking to go down loans path or any further debt, to probably get in touch with you at some point before you go ahead.
Yeah,
and we can, go through the pros and cons, and if it's going to be something you can actually trade out of, the debt be paid back?
If you were taking a small amount of money out of your business and you were slowly going backwards or finding it hard to pay bills before any of this, I would seriously question about whether you should be reopening. It might be a case of you might need to do a major restructure. You might need to redo the way that the business is handled. But I'd be doing that before taking on debt or before changing any of the rules. The other issues that we're probably going to see on the other side is that as businesses do start to go under on the other side, it's a minefield to try and avoid those things. And that's why the property market was always such a hard market, because if one goes down or sort of something central to the industry, it has a flow-on effect. So let's say a major supplier goes under. I mean, they've been buckled by everything. They've got, it's hard to get the stock that they need. They've got high warehousing costs. They've got high staffing costs. Done at it's sort of smallish margins, around sort of 10% at the best of times if they're a bigger scale wholesaler. So those guys might struggle at the other side, and they might just go, hey, you know, we're just going to let this all go. And then what have you paid for that you're not going to get? And then what's the flow and effect of who they owe? And then that's when it takes down a whole industry.